A very special guest joins in on the show, Vikram Mansharamani, who's a global equity investor and lecturer at Yale University. Vikram is joining in from a Skype connection from Boston. Vikram, good evening. Thanks so much for taking time out for us. Let me begin by asking you what your call on Indian equities in general is. How convinced are you of the India story in 2015?
Sure. So I've been paying attention to most markets around the world for many years. And the quick comment I would make regarding Indian equities specifically is that they are not exactly cheap. They're sort of fully priced, but offer one of the more promising outlooks for an economy elsewhere in the world. There aren't many countries that I think will have the growth rates that India will likely produce this year. In fact, many are now suggesting that India may be the fastest growing large economy in the world. And so paying a full price for good growth may be, in today's environment, a worthwhile bet to make.
Vikram, over the last 2 days, rating agencies are also seem to be improving their stance on India. We just had Moody's, upgrade the outlook for India, while Fitch hiked their estimate for GDP. What's your view on this?
Sure. Well, I think we need to think about the macroeconomic conditions facing India before we can reflect on what the ratings agencies are saying. And here, I think the data is very promising, driven by a fall in inflation. Now, we have to pay attention to what's happening in India with the current agricultural season and the potential for food inflation. But that aside for a moment, inflation seems to be contained and seems to be falling. India has been one of the real beneficiaries of lower oil prices. And that's taken away some of the fuel price pressures that would have pushed inflation. That's provided an environment in which the central bank, the RBI, has been able to reduce rates twice this year, and I think are supporting growth in a positive way. And so given that dynamic, it's not surprising that ratings agencies, as well as others, would say the outlook for India is improving.
That's correct. Vikram, what did you make of the RBI governor's commentary, and how do you assess his stance now? Do you see rate cuts in India from here on relatively fewer than what most are expecting around here?
Sure. I have to say, I think the governor is doing a spectacular job. He is, of course, trained as a U.S. economist, or a U.S. trained economist. But at this point, I think he is doing everything as well as can be expected. The two interest rate cuts earlier this year, I think, were well orchestrated. They were well thought through. It made sense given what had been happening with oil prices, given what had been happening with inflationary pressures. But now that those two cuts had been made, I think taking a pause at this point in time is logical. It makes sense. The transmission mechanism of taking these rates down has not resulted in increased lending. And so I think that an improvement to that transmission mechanism, and I know many commentators have been talking about this, is really the objective, I believe, of the central bank now, to stimulate the economy and to support growth. I think that is what they're working on. It's a logical focus for today's time. And I think that everything else they're doing makes a great deal of sense. The fear I have for India, and I think will put the central bank in a difficult position, is if oil prices rebound rapidly, or if food prices in India rise rapidly and we get a bout of inflation. That will put the central bank in a very difficult position. And I think right now they're well positioned to endure almost any scenario. But one scenario that would be very problematic would be one in which inflation rears its ugly head and proves to be persistent. I think it's an unlikely scenario, but it's one worth watching.
Okay, let's talk about then the global cues that for now at least seem to be sort of favoring us. What did you make of the recent batch of data out of the US? Many believe that a June rate hike now is out, for now at least. Also, how do you see all that sort of impact emerging market currencies and equities over the next few months?
Well, of course, what the U.S. Federal Reserve does affects the U.S. dollar and therefore affects many currencies around the world. What the U.S. Fed will likely do is driven by U.S. economic conditions. And U.S. economic conditions, I believe, are weaker than people had thought, creating a recent bout of, let's call it, dovishness on the part of the central bank's thinking here in the United States. Now, I think this is driven by jobs and job creation, and we have conflicting data in the United States. On the one hand, we have Walmart, McDonald's, and others raising wages for the average employee. Now, that is not a sign of a loose labor market. That is a sign that labor markets are tightening, and wage price pressure should be increasing. At the same time, we've also had a relatively weak jobs report that came out of the government last week. Now, is that a seasonal problem? Is that a temporary issue? Or is that a slowdown that's underway in the United States that we have not yet fully seen the data for? I think on the margin, this makes the U.S. Federal Reserve less likely to act in the short run and to push off the rate rises for some period of time. Now, that is, of course, very bullish for the emerging market. If U.S. Interest rates do not rise, then the capital would unlikely fly back to the United States, leaving a more liquid environment in the emerging markets that could be supportive of asset prices. So I guess what I'm saying is this is a temporary phenomenon, I hope, in the United States, but there is definitely a bout of weakness that people are sensing here, and that has resulted in a belief increasing among the investment community here in the United States that there will be a pause, that the rates will not start rising as rapidly, or in fact, the U.S. Fed may wait a little bit longer.
Well, since you're talking about the investment community in the United States, just wondering, I'm sure on a daily basis you meet folks from the world over. What's their view on the reform pace and policy steps that are being taken by the Indian government?
Yeah, so I have to tell you, I was among Prime Minister Modi's biggest fans when he was elected. I am still one of his biggest fans. I think he has all the right ideas. I think he's executing in the right way. I believe the individuals he has surrounded himself with, whether it's the central bank governor or the finance minister or senior advisors to the government on finance and economic matters, they are all wonderful, accomplished, and here's the key part, market-oriented individuals. And I think because of that, the hope and of the outlook for India and the Modi regime is very positive. I have to believe that the outlook is good. Now, the fundamental debate that I have when thinking about for India is this is Modi versus the bureaucracy. And Modi versus the bureaucracy is a big problem. And it's not clear who's going to win that battle.
Right. Vikram, when you interact with foreign investors in your own backyard, how are they looking at Indian markets as an investment class? How are they assessing the prospects of Indian equities over the longer term?
Well, India as an investment class is part of the greater emerging market story. I believe that people are starting to say India has the potential to be the world's fastest growing large economy, and that offers opportunities. Now, sadly, for those that are more value oriented, the Indian economy or the Indian stock markets are not cheap. They're fully priced. And so going back to my earlier comments, I think that means that we have a very good story that's priced as a very good story. And that means that it ends up being a relatively a neutral positioning in the world of in the eyes of most investors.
Right. And Vikram, leave us with your views on China. How serious is the China slowdown issue? Now they're talking about another stimuli for the economy. Do you think these measures which the government is contemplating and also taking actually bearing fruit?
Sure. I've been speaking for some period of time that I believe there has been an investment boom in China that is in the process of busting. And there are several points that I would highlight. Number one, the slowdown of investment spending and building of infrastructure in China, which incidentally has been very overbuilt, has resulted in downside pressure on commodities. And in this case, I would encourage you to look at iron ore prices to see how they're hitting all new lows even last week. So that's number one. Number two, domestically, there is a financial system that is exhibiting signs of stress and vulnerability. We have real estate developers that are necessitating bailouts, and we have a financial stress in trust products and other shadow banking, which the government is having trouble controlling. And that has the potential, I'm not saying it's certain, but definitely has the potential to create financial chaos. And then the last point I would highlight is, as the strong dollar has been spreading through the global economic system, it has been taking currencies that are de facto linked to it up. And on a trade-weighted basis, the Chinese currency has improved or appreciated quite dramatically in the past several years. That is putting pressure on the export sector, which is becoming less competitive and is a major engine of the Chinese economy. And so if we have these three things occurring simultaneously, which is financial system risk, downside risks to economic growth because of the investment boom ending, and a consumption story that has not yet fully taken hold, and then lastly, the currency price pressure on the exporters, I think that China really is going to be slowing for some period of time. It would not surprise me if the Chinese growth rate hit a 5 handle, that we had a 5% growth number out of China at some point in the next 5 to 10 years. That would not be a surprising development to me, given the dynamics there.
All right, Vikram, we'll let you go on that one. Thanks so much joining us on the show today.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.